Okay guys, in today's video we will be talking about daily bias versus weekly expansion. So what a lot of traders do and what you see a lot of traders do is that before they get into the trading day, they want to look for their daily bias, which is they're trying to look for the most likely direction which price will trade for that day. So they want to know whether they're buying or they want to know whether they're selling for the day. However, for me, I used to struggle with that and I used to try to find daily bias and stuff like that. But I would say trying to find every single day bias for most traders, that is unrealistic. I would say it is better to prioritize weekly expansion over daily bias. So where is the weekly candle expanding to and what zone is the weekly candle trying to tap into, instead of trying to find daily bias, because at the end of the day there's many moves within a day, and you can see from this chart you want to use key levels, you want to use PD arrays, you want to use order flow to help you determine your daily bias or the weekly expansion. So if we go to the weekly time frame, we will be able to see that on this week, this is the weekly candle, this is the previous week's candle. We can see that what could we estimate or think that price is likely to do next week. So we can mark out these key levels. This is a weekly low. There's a possibility that price could push downwards to tap into this weekly low, or there is a possibility that price could move upwards to tap into this weekly high, depending on other factors. Then we could move over to the daily and look at the daily time frame and look at how the daily time frame is respecting certain key levels, respecting certain imbalances, the kind of reactions that it's having off of this. We can see that on this daily time frame, from the way price moved yesterday, we were respecting this daily gap. So yes, you might have a bearish daily bias, but you can still also catch buys or catch longs, where you could catch a long to the drawn liquidity of this daily FVG, fair value gap, and you could also catch a short downwards. So I would say the best way to do it is that you want to look for those intraday draws on liquidity. So you mustn't always have just one direction that you're willing to trade for the whole day and marry that bias. You could also use drawn liquidity to determine what kinds of trades you want to trade and what kinds of, the basic thing is that you want to follow the money, obviously. So what point is price likely to tap into next, or what price is price likely to tap into first before it goes to where you want price to go.